Yes, today we are going to see a format on income statement. So, in the income statement, the first part we are going to calculate gross profit, and in the second part we are going to calculate profit or loss for the year, and then later on we will come with the format of the statement of financial position. So for the time being, we are going to see a format of income statement up to profit or loss for the year. So first of all, we will have sales revenue in the first column. Then we list sales return, goods returned by credit customers in the first column. Then we put in the second column the difference. This is known as net sales revenue. Then we leave a line, we write down less cost of sales. So title we have to underline. We will have opening inventory in the first column, add purchases, steel in the first column, add carriage, cost of transport, add carriage inwards, what we call carriage on purchases. Then we add the total in the first column, less drawings of goods, steel in the first column. Then we less return outwards, goods returned to suppliers in the first column. Then we'll get the total, and then we less closing inventory in the first column again. Then total in the second column. This will give us cost of sales, what we call cost of sales. Then net sales revenue less cost of sales. This will give us gross profit or gross loss. So here we are. And then we'll continue with add income. So this is the first part where we have calculated gross profit. Sales revenue, less return inwards, sales return, we get net sales revenue, less cost of sales, opening inventory, add purchases, add carried inwards. In case there is no carried inwards, we have to add opening and purchases, we put it here. Less drawings of goods. If there is no drawings of goods, then we less return outwards, we get a total. Less closing inventory. So remember, dear students, when we are going to change column, we are going in the second column only when we have deducted closing inventory. Then net sales revenue less cost of sales. This is cost of sales. Then the difference will give us gross profit or gross loss. And then we come with the format of income statement, the second part where we are going to calculate profit or loss for the year. The second part, so the first part we have calculated gross profit, and then it will continue just below gross profit. We will have add income like discount received, commission received, rent received, and so on. And then we'll get total income, and then then we have to record expenses. So gross profit, I copy it again here, gross profit. In the first column, add income, we have discount received still in the first column. So this one we can put it in the second column, gross profit. Rent received in the first column. Commission received still in the first column. We have interest received. It depends on the question. Interest received. Then we get a total. We put it here. Gross profit, add income. This will give us total income. We put it here. And then we less expenses. We have wages, and salaries. This part is very easy. The second part, we have rent and rates. We can have sundry expenses. There are so many expenses. Sundry expenses. Okay. Advertising. For the time being, we assume that we have all these four expenses, advertising, and then we add all, we put in the second column, and then total income less expenses. This will give us profit or loss for the year. And then we have to close it here. So here we have the first part of the second part of the income statement. We are going to calculate profit or loss for the year. So the second part is very easy. We just have to write down the income and the expenses. Total income less expenses, we get profit or loss for the year. So these are the income statement of a business, how to prepare income statement. First part, we are going to calculate gross profit, and in the second part, we are going to calculate profit or loss for the year. And then we will come to see the statement of financial position, where we will have to record assets and liabilities. So, in the income statement, in the statement of financial position, we will have three columns. One column for costs, the second column for depreciation, and the third column net book value. So the first part, we will have the first title, non-current assets. Example, building, equipment, motor van, and so on. And then we will have non-current assets. We have first non-current assets. So here we are. We have in the first column cost, second column depreciation, and the third column net book value. Okay? Here we are. Here, statement of financial position as at 31st December 2020. So the first one we will have non-current assets. Non-current assets. We have to put here, for example, motor van, first column, and then if we have depreciation in the second column, total in the third column, equipment, first column, depreciation, second column, and then we have the building non-current assets, and then in the second column, depreciation, and so on. And then we have to close the first two columns. This will give us total non-current assets. And then we have to write down current assets. So we'll have closing inventory. In the second column, we'll have trade receivable. We'll have cash at bank, maybe cash in hand, and expenses prepaid. And then the total in the second column, not the same level. The total, this is total current assets. And then we have to add this one. We close it, we call this one total assets. Okay? Non-current assets, we have cost less depreciation will give us net book value. That's the total non-current assets. Then we have to record current assets, and then total current assets, add total non-current assets. This will give us total assets. And then we are going to see the liability side of it, how the business is being financed, that is to pay for non-current assets, to pay for current assets, and so on, where money has come from, from capital. Money has come from capital. Capital may be obtained from loan from banks. Okay, and the liabilities. Now we will have finance by how the business is being financed. We will have capital, second column, and profit for the year. If we have loss, we will less it, add profit for the year. Then we stay in the second column, less drawings. This will be the total drawings, cash drawings plus drawings of goods. And then total will be in the last column. This is known as owner's equity. That is the capital owned by the business. And then we have current liabilities. Current liabilities will have trade payable, amount of money owed to suppliers, bank overdraft, money taken from the bank, a small amount of money borrowed from the bank, bank overdraft, expenses owing, expenses due, amount of money owed for expenses, then will give us total current liabilities, and then we will have the last one, non-current liabilities. This one will have loan. In the last column we'll have loan, and then we close it. This will give us total equity, means capital, total equity and liabilities. So in the statement of financial position, asset must be equal to liabilities. So here we are concerning the format of income statement and the statement of financial position. You will have to master this format properly. You will be given question for grade 10 final examination and even for grade 11 for your final examination. So it is very important to master this format properly. Thank you very much for your attention.